had a really dear sweet friend of mine today ask me, hey Jerome, is it time to start loading up on Bitcoin or should I sell what I have? And I hate to give people bad advice, okay? But what I see right now in crypto is big, red, flashing lights with the siren blaring. It looks so dangerous in crypto right now. We have the fallout of the FTX, and I'm sure you guys might be sick of hearing that already, but the cascade is spreading. We're seeing that it's spilling into the mainstream because a lot of these traditional banks are taking hits, traditional investors taking hits from FTX. And we're all looking around and asking ourselves, okay, what's going to be hurt next, okay? Well, the main thing that's been hurt is confidence. I'll tell you that. Okay, but we're going to keep talking about Grayscale and we're going to keep talking about Genesis, but there's a lot of eyes on Coinbase right now. I do hope you watch this whole video. This is so important, and please subscribe. It's hard to know what's going to happen next, but there is some serious trouble with Coinbase. Okay, I'm going to tell you two things about it. First, and maybe a little more obvious, is we can look at the stock price of Coinbase, okay? It's down 83% since last year. That's huge. That's a massive move down, okay? And 83% of that's catastrophic to your portfolio. But do you know why the stock price is down 83%? It's not because Bitcoin went down. It's because Coinbase is paid when transactions occur. And when cryptos are lower priced, when they're lower priced, less transactions, people lose interest and they stop trading, and auntie's not interested in investing anymore. And so the activity goes down, and that's how Coinbase makes all its revenue. So activity's down, and you have a lot of people that are cashing out, and that is putting strain on these stable coins. Also, a lot of people are just, they're taking their risky altcoins, they're converting it to Bitcoin, and they're taking it off the exchanges altogether, which is not good for Coinbase. We see the chart very clearly indicating that withdrawals are happening rapidly. But here's the second thing. To me, this is the most interesting and the most important. I do hope you're still here. There's also these things called corporate bonds. Do you know what a corporate bond is? Most people only think of stocks as a way to invest in business, but there's also corporate bonds, and I'll summarize it because a lot of people don't know what this is. A corporate bond is like a loan to the business. You loan the business money and it pays you a fixed amount back in return. So when you own a share of the stock, you're entitled to the dividends that share pays, or sometimes the price of your share will be higher, and so you turn around and sell it for more, and you profit that way. But shares have more to do with earnings. Bonds, on the other hand, you're loaning to the business and you're getting paid. So when these bonds that Coinbase issued were brought out, they're issued at 3%. So how much you loan them, you're guaranteed back 3% of that as long as they're in business. And what's also important about the bonds is you are entitled to, as a holder, you do get access to some money if the business is liquidated, okay? But here's the most important part. The bonds that were issued at 3% for Coinbase are now yielding all the way up to 16%, which is a big red flashing siren, okay? That means that their debt is toxic. Smart money invests in bonds. Big money like to invest by bonds. They don't want a bunch of risk. They want for sure money back. So it's a good choice for them. A 16% yield on a bond is absolutely huge, okay? And it doesn't get all the way up to 16%. It was good at 3%. It doesn't get all the way up to 16% unless the people that were holding it at 15% said, oh shit, I don't know if Coinbase can make good on these debt payments. So literally, the big money is acting as if Coinbase is in big trouble, that they possibly can't stay in business. And I did read, and here's the kicker, here's the cherry on top. I did read a fascinating tweet just now, and I'm going to post that. Check this out. If Coinbase should declare bankruptcy for whatever reason, the customer deposits may be considered bank assets and bailed in accordingly. So customer accounts would be paid in the event of a liquidation. Customer accounts, I do believe, get paid to the people that are owed the loans. That's the bondholders and whoever else. Isn't that something? Tell me what you think.